Hey everyone, welcome back to our channel where we help you improve your personal finances. Today, we're going to talk about one of the most important aspects of your financial health, your credit score. Your credit score is a 3-digit number that tells lenders how risky it is to lend you money. The higher your score, the better your chances of getting approved for loans, credit cards, and other financial products at favorable interest rates. So, if you want to improve your credit score, here are some tips you can follow. Check your credit report regularly. Your credit report is a record of your credit history, including your payment history, outstanding balances, and credit utilization. You can get a free copy of your credit report once a year from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion. Review your credit report for errors, such as accounts that don't belong to you or late payments that were reported incorrectly. Pay your bills on time. Payment history is the most important factor in your credit score. Make sure you pay your bills on time, every time. Late payments can stay on your credit report for up to 7 years and can have a significant negative impact on your score. Keep your credit utilization low. Credit utilization is the amount of credit you're using compared to your total credit limit. To improve your score, keep your credit utilization below 30% of your available credit. For example, if you have a credit card with a $10,000 limit, keep your balance below $3,000. Don't close old credit accounts. The length of your credit history is also a factor in your credit score. If you close an old credit account, you're shortening your credit history, which can lower your score. Instead, keep your old accounts open and use them occasionally to keep them active. Don't apply for too much credit at once. When you apply for credit, it generates a hard inquiry on your credit report, which can lower your score. Try to limit the number of credit applications you submit, and space them out over time. Use a credit monitoring service. A credit monitoring service can alert you to changes in your credit score or credit report, such as a new account or a delinquent payment. Some services also offer credit score simulators that show you how certain actions, such as paying off a credit card or applying for a new loan, could affect your score. Consider a secured credit card. If you have poor or no credit, a secured credit card can help you build credit history. A secured credit card requires a deposit, which becomes your credit limit. Use the card responsibly and make on-time payments to improve your score. Negotiate with creditors. If you're struggling to make payments, contact your creditors and try to negotiate a payment plan or a lower interest rate. A missed payment or default can have a long-lasting negative impact on your credit score. Improving your credit score takes time and effort, but it's worth it in the long run. A good credit score can help you get better interest rates, qualify for loans and credit cards, and even rent an apartment or get a job. So, that's it for today's video. If you found this helpful, don't forget to give us a thumbs up and subscribe to our channel for more personal finance tips. Thanks for watching, and we'll see you in the next one.